Hi, I'm Jimmy. In this video, we're looking at Intel stock. We're doing an update based on the most recent earnings report where Intel reported earnings and the stock got crushed because of it, even though they actually beat earnings. Now, this video actually it's a snippet from the most recent discounted cash flow stock analysis live stream that we do in our private investing community. If you are curious and if you'd like to join the investing community, I will leave a link in the description below to that investing community. It's a Patreon page. You jump over there, it'll give you access to the live streams. Thank you, and here comes the video. Okay, so basically the news, the headlines coming out of Intel are these. This is what this is, right? Intel slumps its spending plans spur downgrades. Yes, a whole bunch of, I heard 3 or 4 different companies have downgraded Intel. Plus, Intel shares have fallen. They're down, I don't know if that's up to date, 6%, or 11%, $6. Yeah, that sounds more accurate. But here's my thing with Intel right now, is that it doesn't seem that Intel is in a terribly bad position right now. I really don't think that they are. So, earnings, just looking at their earnings, they were expected to report $1.11 per share. They came out with $1.71 per share. So they beat expectations, yet the stock is down big. I think that the reason for the giant drop in Intel is the outlook. Some of this is very logical. As one example, we have, oh yeah, by the way, this long-term outlook I took right from I took right from the company's management team. Management put out a presentation with their earnings report. You can find that on the website, although, you know what, we'll post up the PDF version up on the Discord. And I took this long-term outlook, line for line, straight from their report. They're expecting $74 billion in revenue in 2022. Fine. Now, to me, here's where it gets interesting. They're expecting a 10 to 12% compounded annual growth rate over the next 4 to 5 years. To put that in perspective, over the past 5 years, if you took the number 5 years ago compared to the most recent year, they put up about 7.1%. So they're calling for a huge increase from 7% to about, let's say, 10% on the low end. Our question at the end of the day is, do we think that they can do it? Now, continuing on down what they expect, and I think that this is the big one. I actually think this is the reason the stock is as far down as it is right now. Gross margins over the next 2 to 3 years is expected to be 51 to 53%, and then they say it's going to be moving upwards after that. Fine. But 51 to 53% for gross margins. Over the past 5 years, the average has been about 60%. So they're calling for a pretty big drop-off in gross margins. Now, I actually don't look at this as a bad thing. Of course, the headline is bad. If you told me Intel's going to drop their profit margins by a decent amount, well, yes, of course, by more than 10%, of course, I'm going to think that's a negative sign. But I'm thinking back to some videos that we've done over on the main Learn to Invest channel. And on that channel, we've talked about how AMD is really beating Intel. Let's call a spade a spade. AMD, in recent years, very recent years, long-term Intel's enormous compared to AMD. But over the past couple of years, AMD's products have gotten better. They are now faster and less costly and more effective than Intel's. When I personally bought Intel, even when I did the videos on it, even when I was doing the analysis, yes, they looked undervalued, but it was far beyond that. It was the decision to invest, the risk, called the risk reward, was, do we think they can turn around the business overall? Do we think that they can catch Intel? They have more than enough cash. They, again, are enormous. Just look at their $75 billion in revenue in 2022. I forget what AMD's is, but I know it's not even close to that. So, in different videos that we've done in the past, we've talked about the fact that Intel, I believe, in order for Intel to be more competitive, they have to lower their prices and they have to make better products. If you lower your prices, if that actually happens, your profit margins are going to drop. That's simply going to happen. So them dropping, by the way, 50 or 60% profit margins are amongst the highest in the industries. They've been able to maintain very high profit margins because they manufacture a lot of their own chips. AMD outsources a lot to Taiwan Semiconductor. Intel doesn't. Intel manufactures a lot of their own. Now they're trying to roll out additional growth. I've heard they're trying to build new plants in the United States, probably around the world as well. But at the end of the day, I'm not too surprised that this stock would get killed because management is calling for a decent drop-off in profit margins. The difference in perspective between apparently what the market is doing today, down 11%, and my perspective is that I think this is a good thing. This is exactly what Intel's supposed to be doing. I am okay with them dropping their profit margins. That actually continues us further down the line here because CapEx, this is the black part's according to management, green part is what we've added. $20 to $25 billion in 2022 in capital expenditures. Capital expenditures, just so everybody's on the same page, is generally how much the company spends on an annual basis to maintain the business and maintain growth of the business. If you have to redo the roof, that would be capital expenditures. If you buy a new plant, probably not. That would probably fall in capital investing. It could. It depends on how the company classifies it. But point is that they are expecting additional growth. So yeah, it looks like according to them, that's one of the reasons that their CapEx numbers are popping up as much as they are, because over the past, in 2020, they put up $14 billion in CapEx. Over the past 12 months, they put up $16 billion, and management is calling for a shift to $25 to $28 billion. By the way, to calculate free cash flow, you take cash flow from operations, subtract capital expenditures, and you get free cash flow. Assuming capital expenditure, assuming cash flow from operations stays the same, and you increase capital expenditures by an enormous amount, well, you're going to get lower free cash flow. Lower free cash flow, in theory, lowers the value of the overall business. But if the company is doing that to improve the quality of their chips, imagine they're able to derail AMD's recent dominance over their chips. If Intel's able to derail what they're doing and they're able to start producing a chip, imagine next year or in 2023, Intel comes out with a chip and consensus says, okay, this one's the best chip out there. It's better than what AMD's putting out, or it's just as good and the prices are competitive. Well, AMD is trading at some crazy multiple compared to what Intel is. Intel's trading at a very, very low multiple, and relative to a company like AMD, and I think that gap would go away very quickly. Suddenly, Intel, if they can actually pull off what management says that they're going to do, I think this is a hugely positive sign for the business. The fact that the stock is down today is wonderful. If people want to jump in, the price is better now. Now, I bought my shares $44, $45 per share, but I'm not even in the least concerned. Here's when I will be concerned, if I will get concerned. The good part is management mapped out some numbers for us. Well, what if next year, 2 years from now, the numbers are not shaking out this way? Capital expenditures aren't $28 billion on the high end. Instead, they're $35 billion. Gross margins aren't 53% or 51% on the low end. They're 40%. All right, now I have a lot of questions as to whether or not management can pull this off. But if they're anywhere near that, this is a long-term investment. But I'm not even worried about what happened in this quarter. It's not terribly important in my mind. This outlook is exactly what I'm after. That being said, the one thing I do disagree with them about is the dividend. They are committed to a healthy and growing dividend. That is according to them. And great. I love a dividend as much as the next guy. But if they said, you know what, we're going to pause the dividend. Actually, that would really cripple the stock. That sounds like a good deal coming. But if they said that we're going to pause the dividend, but we're going to double our capacity, we're going to double how many chips we're producing, and by the way, we're taking all the dividend money and rolling that into R&D to come out with the next best product. What happens now? Short term, the stock's going to get crucified for it. But long term, that could do very, very well. So, I hope I answered a lot of questions. I know that on the Discord we've been, fielding a whole ton of questions about Intel. At the end of the day, I'm not at all worried about what is happening to Intel because this is exactly what we were expecting. In fact, we said on one of the previous videos that we did on the main channel that they might need to lower their margins. They might need to lower prices. They're going to have to get more competitive. They're going to have to spend to get more competitive. That's one thing I was happy about when they got rid of their old CEO, who was much more of a finance guy, and they wanted the new CEO, and the new CEO is they're gearing towards creating a better product. So that's what I think Intel needs to do. So I'm not at all concerned. The fact that the stock is down 11% today sounds like an opportunity. Am I buying more? Probably not, just because I'm perfectly happy with the position that I have, and I have a cost basis lower than this. If it kept falling, well, maybe I would jump in and buy a bit more at that point. But again, I'm fairly happy with my overall, the overall size of the portfolio right now, the size of the position in the portfolio. Okay, so clearly I'm sticking with Intel for the long term, and I believe that Intel's going to be one of those companies that over many years, if they can get more competitive, if they can start to create a premium product again, I do believe their stock will do very, very well. That being said, if you want to join us on the investing live streams, we have discounted free cash flow videos, live streams that we do every week. We do building investment portfolios. We do deep dives on different stocks where we go through our 8 steps to analyze a stock. So if you're curious, I will leave a link to the Patreon page in the description below. If you haven't seen the 8 steps to analyze a stock video, I will leave a link right down below. Thank you, and I will see you in the next video.